be reporters.
Go what?
We can be reporters.
Oh yeah, good idea. Hey guys, testing. Can everyone hear me? Right, just checking.
Sure.
Okay. Hey Emo, nice to see you. Right. Yeah, it's hey, can you hear me? I just check doing a sound check to make sure you guys are able to hear and see us. Right. And whether getting the correct resolution too. No, I just need to check something. Output video. Correct. Okay. Can everyone see us? Can everyone hear us properly? Q&A. Oh, but chat is disabled. All right, let me enable the chat. All right. Yep, that's right. Enable the chat. Okay. I've enabled the chat. Can you hear me? Are you guys able to see the message that I just sent in the chat in the chat area? Okay, are you guys able to see? Okay, cool, good stuff. You can see the slides. You can, you can see the slides. You can see me. You can hear me. That's perfectly fine, right? As more people stream in, right? Today we have Annabelle who will be presenting in a moment, right? So I'll be, I'm here to show you guys. I'll do a quick introduction for you guys to a new thing which we are launching in Vantage. All right. So you'll be within your client portal. It's a VIP room, right? So if you are a client of Vantage FX, go try to get access to it. It's a pretty cool place. Okay. So yes, for our Vantage webinar series, right? Every Monday, we know we have the education, the market news. Tuesdays, we have the education sessions, right? So one of the things that people try to look out for is that if you have questions that you want to ask us, there is a place where you can ask us even before, you don't need to wait for one entire week before you can ask us, right? And that place is the VIP room. How do you get access to that? We just launched it. I'm going to show you how you can get access to it. Okay. Once you log into your Vantage, into your Vantage account, right? What you want to do is you want to go to this place here, right? Which is the VIP trading room. This little link on the left. Okay. When you're in here, right? Depending on the amount you have funded, right? You get different access levels, right? I believe if you have a live account, you can already get access to it. But if you have more funds in your account, you get different levels of access. So for example, if you have $1,000, you get access to not only Forex, but commodities, indices, crypto, get a whole bunch of other stuff. Okay. So yeah, it's a pretty simple place. All you need to do is to click this button called VIP room login. Okay. The moment you click on this button, what happens is that it locks you in directly into the VIP room. I'm just going to show you really quickly how the VIP room can benefit you in your trading, right? And one of the key features that you have on top of all the news that we share in the VIP room, any questions that you have on gold, oil, or any of the major currencies, you can just ask it in the VIP room. But more than that, right? More than that, you can come in here and let's just say you're looking at Kiwi dollar. Okay, you're looking at Kiwi dollar. And you're wondering if this is a nice level to sell from. Okay, you might draw a line over here and you can come in and say, hey Desmond, right? Is this a nice level to sell from? Which level are you referring to? You just need to highlight the text. You can click on this little button called link object to text and select the line you just drew. Okay. Once you're done, you can click on confirm, right? And press enter. Now, how this looks like when someone is reading it for the first time is that, hey, Desmond, is this a nice level to sell from, right? Anyone who reads this on the VIP room, when they hover their mouse over the highlighted text, you can see that it lights up on the chart, right? So the benefit of this is that it actually helps you be able to ask more very specific questions when it comes to was when technical analysis, right? So whether it's a support or resistance level, whether you're drawing something, right? You're drawing something like a trend line, you're drawing something like a trend line, you're drawing a channel, you're even drawing Fibonacci, right? You can come in here and you can practice it, right? It's a new thing that we're rolling out at Vantage Markets. So if you haven't logged into your VIP room, if you have access to it, you should be able to see on the left. If you don't have, you won't, right? So it really depends if you access it. Go check it out. I think the majority of you guys might have access to it, right? And that will allow you to really jump into the VIP room with us, practice your analysis, right? And that will help you become a better trader, because all theory without any practice, can be very dangerous, right? So on the flip side, it's better if you can, what you have learned, like for example, in the trade management webinar that we're going to do today, teach you about position sizing, right? About how much you should risk on the trade. That's where you can come into the VIP room. If you're not going to ask something specific about the instruments, you can come in and you can go into the chit chat area over here. You can just chat with other people who are also in the VIP room, and just ask us general questions, share with us different trading ideas, right? And really just trade with a community of other traders, and get the guidance that you need to be a better trader. Okay. Now, one other thing that I do want to touch on before I move on is that, yes, take note that moving forward, right, we have this link over here. You can go check it out. We have all the upcoming webinars that you can look at. So today, right, is trade management. I'll be passing on the time to Annabelle in a minute, right? And she's going to teach you about take profit and stop loss placement, right? How to kind of fine tune it, how you kind of fine tune it to be so that you have an optimal kind of you don't get, sometimes we get stopped out and we wonder, why do we get stopped out and price kind of go in the direction that we originally wanted it to go, right? Or why is it sometimes price just miss our take profit by that few pips and then suddenly goes in the direction that we want to, right? In those kind of situations, right, there's actually a logic behind that. There's a reason that happens, and we're going to touch on it in today's webinar. All right. So yeah, without further ado, I'm gonna pass the time on to Annabelle, and she'll be taking you through this webinar. What I want to encourage you guys to do is please just take the ask as many questions as you can, right? We have another screen open here monitoring the questions that are coming through, right? Oh, I can see some questions from YouTube too. Yep, Yemo, I can see your messages come through, right? All is good over there. Presenting here. Yep. And okay, over to you, Annabelle.
Okay, thank you, Desmond. Okay. Sorry, let me adjust this. Give me a minute. Okay. Can you guys see me? It's clear, yeah? All right. Okay. Okay, I have to adjust this. Sorry, guys. Okay, I'll continue with the session. Just give me one more second while I pull out the slides. 1, 2, 3. Oh, right. You don't see clear. Oh, somebody commented. Don't see clear. The image seems blurred. Oh dear.
Let me just check it
Okay.
out. Just give me a second, Zoran. It's not clear, is it?
If I hear it's very clear.
Yeah. Can I just check with everyone else? Is the image very blurred for you guys, or is it okay? Zoran says that the image is slightly blurred. Anyone else experiencing the same thing? Is the PowerPoint clear at least?
Maybe yes. It seems clear.
Good on your side.
Clear, yes.
Okay. If it's not clear, let us know again. Right. So Zoran, it could be it could be the setting. Maybe sometimes it's the internet connection settings, right? Like if the internet is slightly slower, what it does is that it adjusts the quality, right? So that could be the reason. Yeah, could be. Hopefully, yeah. I mean, in this case, hopefully it's only you. But yeah, if the rest is fine, right? Then okay, all good, all good. I'll be passing the time back to Annabelle, right, to handle it.
I don't want this. I want my slide.
Oh yeah,
Yeah, just minimize. Minimize. Yeah.
okay. Over to you, Annabelle.
Okay. Okay, I'll continue with the webinar today. So today's webinar is talking about trade management, part 1 of 4. We are talking about taking profit and setting stop loss. Yeah. So this webinar is brought to you by Everest Fortune Group in collaboration with Vantage Markets. We are an award-winning research firm and finalist in 2019, 2020, 2021 for Best FX and Equity Research. So what we do here is we work with major financial institutions to help them forecast where the markets are heading. And now we have a special partnership with Vantage Markets where we are bringing you guys the good stuff. So without further ado, let me just continue with the webinar. Okay, but before that, disclaimer, this webinar is purely educational and nothing in this webinar should be construed as investment or trading advice. So please do your due diligence before you trade. Okay, so here are my analysts from the Forex Army. Just now we have Desmond Leong, who is our chief trader. We have Cassandra, Jin Dao, and these are the people plus me because I just joined the company a couple months back, so my photo is unfortunately not here, but it will be up soon. Okay, the agenda for today. Why stop loss and take profits? So why is stop loss and taking profits important in trading? Fixed stop loss and taking profits. What are some problems with that and how do we solve it? Dynamic stop loss and take profit placements. That one, for this part, we will be looking at some of the charts. I have some examples to show you guys what are dynamic stop loss and take profit. And also the last part will be risk allocation as well as lot sizes, ideal lot sizes. Okay, so the importance of stop loss and take profit levels. So managing stop loss and take profit actually helps you to manage your trades more strategically. You know, without stop loss and take profit levels, your trade might be just floating around, or your risk reward might not be there. You might just blow the account up. Yeah. So for risk management, you do have to identify, analyze, accept, or mitigate uncertainty. So what I mean by to identify, analyze, and accept uncertainty is that to properly identify these values are essentially identifying favorable opportunities and acceptable levels of risk. So with the use of proper stop loss and take profits, it can play a crucial role in preserving and growing your portfolio. So not only are you systematically protecting your holdings by prioritizing like less risky trades, but you are also preventing your portfolio from being blown up. Yeah. So point 2, to prevent emotional trading. So what I mean by prevent emotional trading is that having stop loss and take profit levels are also helping you to set some boundaries, to be more disciplined when you trade. Because you know that a lot of people wipe out their whole accounts or more than one accounts due to impulse trading. So this is why some traders rely on a preset strategy to avoid trading under stress, fear, or greed, right? So this is very important because you do not want to do impulse or emotional trading, which most people does. So having stop loss and take profit levels will help you to set some boundaries, and make you a more disciplined trader. So the last point, which is the calculation of risk to reward. This is very important because you need to know whether your risk to reward is rational, meaning to say you do not want to risk $100 to just take profit at maybe $20. That doesn't make sense. So for a $100 risk to get a $20 reward, it just doesn't seem rational, right? So a simple formula for you guys. Let me take a marker. For those who don't know how to calculate your risk to reward, it will be your entry price minus your stop loss price. Pardon my writing because it's a bit hard to control. Divide by your take profit price minus your entry price. Okay, it's a bit messy, but basically it will be your entry level minus your stop loss level divided take profit and entry price, right? Divided by take profit price minus your entry price. Okay. Any question, guys, you can just post on the chat box. I have another screen that is open, which I can see. Okay, let's move on. Okay, so how do we usually calculate stop loss and take profit levels? If you guys don't mind sharing, you can let me know what are your thought processes like when you take a trade? Like, would you be thinking about stop loss and take profit, or would you just enter the trade? Right? And if you do calculate your stop loss and your take profit levels, how do you do it? Okay, so 3 important points of how to calculate my stop loss and take profit would be you can use your trend lines, support and resistance level. So these are core concepts familiar to any TA, technical traders. These are areas on price chart that are more likely to experience increased trading activity, be it buying or selling, right? So traders who use this method typically set their take profit level just above the support or resistance level and stop loss level. For take profit, we set just above the support level and stop loss level right below the resistance level that we have identified. So for trend lines, meaning to say, for example, okay, maybe this is not a very good example. Give me 1 second. Okay, for trend lines, maybe like this. Okay, trend lines. Okay. This looks a bit messy. Okay, so for example, trend lines, you have maybe your trend is this way, correct? So when you buy, usually this is a buy, right? Buy, you're looking at your stop loss slightly below your buy, and then your take profit would be slightly below your resistance level, right? Support, stop loss below your support, take profit below your resistance. Okay, this is what I meant by calculating your stop loss and take profit using trend lines and support resistance. Point number 2 would be my percentage method. So instead of a pre-specified level calculated using technical indicators, some traders use a fixed percentage to determine their stop loss and take profit, meaning to say, for instance, they may choose to take a 5% risk reward ratio or a 10% above or below the price they entered. So this is a very straightforward approach. So meaning to say, if I have a 5% profit, I will just take the position and go take profit of the 5% and go, or a 5% stop loss. So it's depending on what method you use. And lastly, we have the moving averages and other indicators. So traders monitor moving averages closely to look out for opportunities to sell or buy presented in crossover signals. So they can also use other indicators like your RSI, excuse me, or your MACD. Right. So for example, if you cross over a certain area, maybe you want to take a certain percentage of your profit or stop loss. Okay. So there are a lot of methods and ways to do it. So it's depending on how you perceive the charts also. So what's so fixed stop loss and take profit levels. So what is the one problem that you guys can think of when I mention fixed stop loss and take profit levels? Anyone can let me know? Right? Okay, so okay, we have some answers here. No flexibility, no, very rigid. Okay, yes. Okay, so yes, that's correct. So the other problem is that, okay, for example, some if the market turns, you are compromised. Yes, correct. Okay, so one problem with fixed stop loss and take profit level is that yes, it's very rigid, no flexibility to adapt. But the other problem is also that there are some channels out there that feeds the viewers trading strategies like, for example, like maybe you use your moving averages to take a fixed 100 pip stop loss or take profit, right? They are inaccurate, right? So these channels, they always feed you trading strategies like moving averages, for example, to take your 100 pip fixed take profit and stop loss, which is not correct, right? Let me show you guys some of the examples. We have a viewer. If the market goes in your favor, you can't continue with the trade to the end. Goes in your favor. Agree, yes. So we can use a trailing take profit, right? We can trail a profit. Okay, so how do we usually position our stop loss and take profit? This is a chart that I always use. It's a very simple chart to understand as well. So in FX, you always see major resistance area, right? You have here one swing high, second one touch but not breaking, and here you would expect price to actually come here and bounce back the same level as this area, right? But for example, if you're taking a trade, you foresee that it might come up here and bounce. So most people will set their stop loss here, which is wrong because you do not have any space to breathe, right? So for stop loss, always go beyond the previous resistance level, right? And then to take profit, usually we go before or above the support level. The reason why we do this is because once you come to this level, which is the resistance area, there will be a lot of conflicts, or it will be an area where many people have different sentiments or have many different opinions whether the market is going to move up or move down. So there'll be a lot of fighting in this area, which you want to avoid, right? you rather give up this 10 pips to be safe, because for example, if you're doing a short, you have done 90% of your part, right? You rather take this 90% and forgo your 10 pips just to be safe, right? If you touch here and the position bounce off, you lose your whole 90%, which is not what you want, right? So ideally, stop loss should be above your resistance to breathe, and as well as take profit should be above your support. This area, you want to take profit before all the conflict starts here, right? So take your 90% and go instead of losing maybe 60% of it, right? It's more logical this way. So take profit before, stop loss beyond. Very simple to remember. Okay, we have an audience. That's right. It also bounces back slightly before support level. Yes. Hence setting the TP before the support level. Yeah. Okay. Yeah. It's a easy and great tip to remember, right? Okay, next slide. All right. And here, I also want to bring up one point. For most traders out there, a lot of people actually focus on your entry and forgetting about your stop loss and take profit levels, right? So, most of us, we actually check off all the boxes to create this wonderful trade using our Fibonacci, using our stochastic, MACD, whatever, just to make sure that we get this trade correctly, right? Just to make sure that we enter at a very prime and optimal level. So what you want to do is that you have made all this effort here, and then you do not want to be stopped out, right? Just right here. So it's good that you put your stop loss beyond, right? So remember that your stop loss and your take profit are very important as well, right? Because most people will just be focusing on the entry. We'll find all the different levels, important key resistance supports, etc. But we forgot about our stop loss and take profit. These are all as important, right? So the anatomy of the trade includes your entry, stop loss, take profit placements, as well as your break even, your partial profit, your idea invalidation, and also how you are, when or how you're going to cancel your trade, right? So it's not just only the entry that is important. There are a lot of parts to taking a trade, right? So the rest of the parts will be covered in the next few sessions, right, of trade management. Okay, so this is an example. Okay, wait, let me get my pen. Okay, any questions from the audience? Right, let me know. Okay, so okay, for this example, right, you can see that there is a nice support level here and here. So you would expect it to come here, right? This is the magnetic level, right? Because prices always comes back to test, to retest and test again, right? History often repeats itself in FX. So at these levels, prices are more likely to come back and test, right? So you would think that the price will come here to this area, exactly here, okay? So you think for this example, okay, price bounce off one time, bounce off two time, okay, you're thinking to buy, okay, because price might actually go up here again to test. So you're looking for a buy after it break out of this region, okay? So your strategy has a fixed stop loss of 100 pips, which is right above. So you set your stop loss here. Okay, what happens next? What's happened next? Your price actually came back down, right? So it came back down. Instead of going up, it came back down first. Let me use another color, maybe yellow. Okay. Okay, it came down here. Can't see. 1 second. Okay, it came down here. Hit your stop loss because you put 100 pips above, right? And then it bounces off. right here. Right, exactly where you think the price might come back to test. Right here, right? Because you think that it will come here and bounce. Okay. Okay, so you think that it might come back exactly here to bounce off. So instead of putting here, your stop loss should always be beyond. Beyond, right? So that there's space for breathing. Okay. Like I've mentioned, your stop loss should be beyond. Okay. So price tends to get attracted to key levels of support and bounce off them. This is exactly what happened. That's why this buffer zone is extremely important, right? It gives you the extra space to breathe in case it actually comes back down slightly. If you put exactly at the key levels, it's going to take you out of your position, right? So what happens here is that it came down here and then it went back up. So you do not want to be tapped out right here. And then my question to the audience would be, so let's say if you're going to take profit here, where should your take profit level be? Should it be above or should it be below? Okay, we have some answers under the TP. Below, yes, correct. Below, under, yes, correct. So for take profit, it's always below where you think the key resistance is. So it can go both ways, yeah. This is a long position. So if you're going short, it'll be the other way, correct? So if you're going short, your take profit should be here, above. So don't be confused, guys. It's depending on whether you are doing a long or short position. So for this wise, we are doing a long position. So our take profit will be below, right? Below here, this level here. It will be below this level. Here, TP. Because you want to take before all the commotion starts here. Exactly at this line. You want to avoid all the fighting, all the commotions, right? And then for your stop loss, it'll be below because this is a long position. So remember, depending on whether you're long or short. Okay. So always remember, it's always before a key level. See, swing high resistance one. In these examples that I'm giving you, I'm only using trend lines for my take profit and stop loss. Yeah. So for take profit placements, remember, always take before key levels, because this is the magnetic region of strong resistance area where all the conflicts will start. So you want to avoid that, right? So I have a question. Would this apply also when setting a price alert on chart for areas of interest? Setting price alert on the chart for areas of interest. Would you mind elaborating on that? I do not get the question. Right, let me know what you are asking while I continue with the slides. So this is another example for a take profit placement. Okay, so the problem. Okay, so now we're talking about a problem with taking a fixed profit. Okay, so this is clearly a strong resistance area. Okay, because a price has already reacted off 2 times, right? Here 1 time and here very, very nicely. So at the third point, it might actually reverse again. So imagine if your strategy requires you to have a fixed take profit of 100 pips, right? So imagine this is exactly 100 pips, right? Here, exactly 100 pips. the target would place this above your strong resistance area right here, right? So this is exactly 100 pips, which you want to take your profit, okay? See what happens next. Okay, your price actually came here and reacted off. So instead of taking a 90%, you actually lost maybe a 70% or 80% of your trade, right? You see what I mean, guys? So for take profit, always remember is below for long positions, right? If you put your fixed 100 pips, or if you want to be, I mean, for different people, they have different ways of looking at it. And they have different ways to take profit. For example, in my first few slides, I actually mentioned that if you want to have a percentage method, you can actually do that. But with that said, you also have to be careful, right? You have to monitor the markets because you never know where the market might move. There might be some fundamental news, or you never know. So with a fixed percentage method, right, you should always also maybe set some alerts or monitor the markets, right? Must be careful with this kind of fixed take profit or stop loss levels, right? So as you can see here, right, the take profit level that this person set, which is 100 pips, actually didn't fulfill. He would have gotten not stopped out, but he would have lost the trade almost 70 to 80%, right? If the person would have taken here, it will be a 90%. So remember to always take profit before key resistance or magnetic areas, right? So the lesson here is that you shouldn't blindly follow a fixed take profit target just because any forum tells you to, right? So that's the problem with fixed take profit and stop loss levels. Okay, someone asked, I mean, if I was to set a price alert, I should never place it too close to a specific region. Keep it open. Yes, you can do that for your price alerts, right? Okay, I guess setting price alerts is exactly how you would take your real life positions, right? Because you are very interested in the areas where it will be areas where you are interested to take your positions, hence the price alert. So yes, I would say that you can apply this method to your price alerts, right? If you are intending to enter a trade. Okay. So this is our profit target. And then price shot up, but missed by a couple of pips, right? So remember, take profit below. Okay, another one. Take profit placement the wrong way. So as you can see here, okay, give me 1 second. Okay, very thirsty. Okay. So take profit the wrong way. This is another example that we are showing you guys. So as you can see here, big swing, high resistance. Right here, you would also think that price will come to this key level to test, right? So if you are going long, please set your take profit below key resistance area. Take your profit before any commotion starts or any fighting, any mixed sentiments of where the market is going starts, right? You rather take the 90% and give them the 10% just to be safe. Okay. Same goes to your stop loss. It will be inversed. if you have a buy position here, stop loss should be always below. Set some buffer area, right? Okay, so for the Forex Army lesson, always place your take profit before key resistance and support. Very important, right? Okay, we have some questions here. What about if price breaks above your previous support level? What if price breaks support level is below, right? Price breaks above. Sorry, for Yemo, can you actually paraphrase your question? Because for support level, it should be here. I can't break above. Okay. Let me continue my slides. Okay. Right. Okay. So dynamic take profit placements. So what we mean by dynamic take profit placement is using other indicators like your, for example, your moving averages, maybe your Ichimoku or your MACD, your RSI, your stochastic, your Fibonacci, right? To define, right? To define where your take profit placement should be. So not just only key levels, right? To define, you use all the other indicators to help you fine tune where you should take profit. So for example, in this example, I will use the Fibonacci, right, to show you guys how I fine tune my take profit, right? So we have the entry for short here, as you can see. So we are shorting this position, right? This would be our take profit level, okay? And this is our stop loss, correct? Usually you place slightly above, okay? Okay, right here. So if I'm using the Fibonacci projection, it will be 0.1, 0.2, 0.3, and then it should project forward where my next rejection level will be. Because for Fibonacci, it's actually a forward-looking indicator that tells you where it's about to reverse again, right? So for projection, for Fib projection, I know some of you might not have heard or seen of Fibonacci. You can actually go to our YouTube to check out this this webinar. We have a series on the Fibonacci, right? So for Fibonacci projection, 0.1, 0.2, 0.3, projection forward will be 0.4. So how we use this in a dynamic take profit placement is that, for example, maybe my 0.4 is slightly above, right? It aligns with, right? It aligns exactly with what we have been emphasizing on take profit above, right? You want to take your profits and run before you hit the promotion here, correct? So 0.4 is the projection level. It could be the 78.6, it could be the 68%, depending. So at the exactly 78.6, right? It aligns with where I want to take my profit, which is before the commotion here. So this is how I fine tune my take profit levels, right? I move it up, right? From my 84668 to 84932, correct? So right here, I shift it up, my take profit level. Yeah, exactly here. So this is what we meant by dynamic take profit. Okay, you can use other indicators as well, but for example's sake, we are using the Fibonacci, right? So you can use all other indicators that you're comfortable with, that you have learned, like your Elliott wave or your RSI or whatever it is. You can use it on top of or in addition to all your other support and resistance level to fine tune to better improve where your take profit and stop loss positions should be. So it adds the additional accuracy to it, right? So here we shifted our take profit level up. It hit exactly and it reversed all the way. So imagine if your take profit was here and you didn't shift, right? You didn't use other indicators. You didn't fine tune it. You actually lift it here, and this is where it went all the way to your stop loss, right? I know you might say that maybe, okay, about your 50-60%, you might actually, sorry, this is a short position. Okay, some people might say, okay, maybe my entry is here, and then if price actually reversed, I would have cut at a 20% gain, right? I'm still winning because my entry is here, and then I'm still winning at 20%. But imagine what was your risk reward, right? You could have made a 90% instead, right? Your risk reward have already changed, right? Okay, our final two parts, which is this risk allocation. So my question to the floor would be, what would be an ideal risk allocation that you guys use for a trade? Let me know. Is it 1 to 3, 5, 10, 20, or you just put your entry level and not care about what is your take profit or stop loss, which most people would do? Okay, I have a couple of answers. 1 to 3 max, 1, 5. Okay. Okay, 1, 3, yes, okay. So an ideal per trade. What is an ideal number? Is it 1 to 3, 5, 10? Okay, in this example, I will use this to maybe pick your brain a little bit. Okay, let's take the roulette example. Okay, I'm sure most of you have seen the roulette table or actually gambled, I'm sure. Okay, so on the roulette table, there's 18 red, 18 black, and 1 green. If you have $1,000 now, if someone were to sponsor you $1,000 now, right? How much would you actually put in this game, in this roulette game, thinking that you'll win? You can only put one bet on either black or red, and then let me know what amount you're gonna place. Would you actually place the full $1,000? Would you actually place $200? Would you place 100? All in? I mean, this is not your money. Yes, you can all in. Okay, I have some answers. $10, $500. Oh, that's a high risk taker. I mean, yeah, you're gambling. Okay, 100, 200. Yeah, we have a couple of answers. Okay, my point is, if I were to change your roulette table to 32 black, and I give you the same amount, would you have put more, or would you have put less, or would you put the same exactly as what you would have done in the previous slide? The same. Your odds are so high now. 32 black. Okay, some say the same. Okay, we have some all-in answers. Yeah, more. Okay, my point is, always remember your setup, meaning to say your odds of winning, right? In this example, what we are trying to bring across is that risk allocation is depending on how good the setup is, correct? If your setup is superb, maybe you can risk more, correct? So in this example, your odds are way higher, 32, more than a 50%, right? For this, is definitely less than a 50%, right? So if your chances of winning, or if the setup is good, obviously you will put more risk into it, right? Because your reward is much higher, right? Your risk allocation is depending on how good the setup is. So if there's a good setup, yes, you can risk reward ratio of 1:2 or maybe 1:3, right? So that's what we are trying to convey here, is risk allocation is depending on how good the setup is. Okay, the last part would be ideal lot sizes. Any of you know or do not know how to count lot size? Or are your platforms or are the platforms that you use auto calculated? Let me know in the comment section. So for ideal lot size wise, a account size $50,000, $50,000, NZD USD, 1% of the account would be 500, 2% 1,000, and then 3% is 1,005, right? I mean, if you go by normal calculation, you multiply it. And then here comes the stop loss. You put it at 50 pip stop loss. If it's a 0.1%, 0.1 lot, it'll be $50. And if it's a 1%, one lot, it'll be $500. So one lot would equate to 1% of your account. So what we are trying to say here is that how much you risk, right? How much you risk will affect the lot size that you trade, right? So for example, if you only want to risk 1% of the account, $500, the max that you can go is one lot based on 50 pips stop loss. Okay. Okay, I have another question for you guys. So in this section, 50 pip stop loss versus 90 pip take profit. And let me write it here. 90%, 90 pip reward. Okay. And versus this 20 pip stop loss and 36 pip take profit. Which do I make more? Does anyone know? If I have a 50 pip stop loss versus a 90 pip take profit, and this 20 pip stop loss, 36 pip take profit. Yes. Okay. I'm glad that the floor answers make the same, right? Okay. So our risk reward is about 1.8 for both. It's the same. Okay. So some places they might tell you like, oh, we have made 100 pips today. We have made 1,000 pips today. Like some channels or some traders, they might tell you this. I made 1,000 pips today. Wow. And then but what you do not know is that behind the scene, right? The 1,000 pips that you made has a stop loss of maybe 100,000 pips, or okay, not so exaggerated, maybe a 10,000 stop loss, right? So you can never believe, not say never believe, but just be careful with those people who actually says that they make 1,000 pips, 5,000 pips, because you never know what's the stop loss that they have. Okay. So what we are trying to say is that it's not about the number of pips that you have made, but it's the risk reward. Okay. Remember, your risk to reward ratio is very important. You do not want to risk $100 for a $5 reward, right? Doesn't make sense at all, logically. Okay. So I've come to the end of my webinar today, talking about trade management, stop loss and take profits. Okay. In conclusion, what I want to leave you guys with is that you always take profit below the resistance area, and you always want to put your stop loss below your support, right? To give it some space to breathe. your buffer area, right? Take profit below. So you run away before any fight starts. Okay. And as well as your take profit stop loss level. Okay, for those who do not know how to calculate, there's a website that I have. Let me just pull the page out. Give me 1 second. Right here. Okay. So for those who do not know how to calculate, okay, you can go to this website, my FX book, where you can come in here and you put your currency pair. So for some platforms, they do not, they require you to actually put in your lot size. So you can come here to calculate your position size if you do not know. So Euro USD base currency, USD account size, let's say 10,000. Your risk ratio, meaning to say how much are you willing to risk? 1% or 2%, for example. Stop loss 50 pips, calculate. So this is the amount of lots that you are allowed for this given amount of money you are willing to risk, and your stop loss level being this. So if you need to key in your lot size, this will be it, right? Okay, so thank you guys for tuning in. I will see you guys in the next session. Oh. Okay, thank you. Thank you guys.
Is it?
I already off the video, so
Where's the lights?
yeah, but my Zoom is already, I closed the video.
It's still on.